Hello everyone. So we basically took a huge, monstrous hit in the market over the past few days. Things are getting very overextended to the downside. Obviously, we're going to take a look at the S&P 500, the NASDAQ, the Russell, the 10-year yield, the bonds, the VIX, and more importantly, we're going to look at the large tech stocks because the large tech stocks were the key reason why the market held up. And now to the downside, we're going to see how much more room there is to fall on the large tech stocks. All right, so without further ado, we're going to put everything together. Let's get started with the video. So number one, we have to take a look at the dollar, even though the correlation between the dollar and the market currently has not really been perfect. So the dollar is relevant because when the dollar is bullish, that is bearish for the overall market. Currently, it's not playing out perfectly because today we had a huge red day on the market, obviously, but the dollar did not show a huge green day, which is basically show a negative correlation. So the correlation currently on the dollar is a bit skewed because the majority of the movements coming out of the stock market is dependent on the tech sector. So they're dependent on equity prices, not so much the dollar. So the dollar, not really showing that much at the moment. All right. The next fun thing that I want to take a look at with you guys is the VIX. So the VIX, very important to watch because the VIX also has an inverse relationship to the market. If the VIX is doing well, then then it means that the market is bearish, right? So basically, with the VIX this far overextended outside of the Bollinger Bands, you see that there's history that it can maintain itself for a few days, but then eventually the volatility dies down. And usually when the volatility dies down and when the VIX falls, then it leads to a bounce in the overall market. So when the VIX is falling, then that's good for the overall market. So right now, we're getting to the first stages of the VIX being overextended to the upside. So it's not an automatic bullish setup for the market, but this is good that we're starting to get to overextensions. It becomes very easy to trade when things are overextended. So right now the VIX is overextended to the upside. Generally, that means eventually the VIX needs to fall. And when the VIX falls, then that means that there should be a bounce in the overall market. Okay. So there's that for the VIX. The next two things that we have to take a look at, they're a bit, correlated as well. We're going to take a look at the bonds and the 10-year yield. Okay. So number one, the bonds are important to look at because it has a bit more of a correlated relationship to the market. Not so much currently, right? But it definitely does correlate very well when there are extreme levels of resistance and support broken. So what I mean by this is when the bonds have a correlated relationship to the market. Okay, so if the bonds are going up, then the overall market is also going up. Okay, but this recently has taken into effect more when the bonds break above key levels of resistance. This is when bullishness starts showing in the market. And when the bonds start showing weakness below key levels of support, this is when that weakness in the bonds starts to permeate into the market. So that's currently what's going on. Okay. So very similar to the VIX, right? The bonds are getting very overextended to the downside here. And when things are very far overextended to the upside or the downside in terms of the Bollinger Bands, then usually that leads to a bit of a bounce to reclaim this Bollinger Band level. So tomorrow, we're going to have to see where the bonds end up. And in the next, once this Bollinger Band calculates for tomorrow, generally, we should not see. So basically the bonds, zooming out, right? The bonds still have, they can continue falling for another day or two very, very easily. The bond, just because the bonds are this overextended to the downside, it is by no means an automatic reason to be bullish on the market. But now is not the time. Now is not the time to be bearish on the market. And it's getting close to leaning long. So basically, the bonds, yes, we can easily fall lower. Tomorrow even, we could fall much lower. But the more overextended we get to the downside, think of the market as a rubber band. When you pull it, the further away you pull it, eventually when you let go of that pull, it snaps back. So we just basically have to see how, heavily it snaps back, essentially. So that's my thought process on the bonds. And then the next thing is the 10-year yield. So the 10-year yield is basically just inverted. And, when the yields are doing well, that's obviously bearish for the overall market. And once again, you can see the yields are far extended outside of the upper level of the Bollinger Band. When this is the case, obviously it needs to fall back into the Bollinger Band. So with the yields, when the yields fall, then it's good basically for the stock market, and we're seeing overextension to the upside on the yields. So and basically we can look at the correlation between the yields and the S&P. Basically you just search up SPX, right? And then you put same percentage scale, and you will see the orange is the price of the SPX, and obviously this is the yield. So you can see that when the yield starts to fall, then that's bullish for the market. And obviously when the yield starts to increase, that's bearish for the market. And yeah, that's basically the case, essentially. So with the yields this extended, right? When the yields are showing extremes, when the bonds are showing extremes, it becomes easier to trade. So yeah, with the yields like this, we have to see how tomorrow goes. And then, it'll give us like a better understanding of what's going on in the market. But definitely 100%, guys, it's not the time to start going short. It's the time to start looking for longs. And we're going to take a look at that after. First, we're going to take a look at the overall indices and everything after. But first, now that we looked at the VIX, the dollar, the yields, and the bonds, let's go ahead and take a look at the large tech stocks, which were the reason why the market even bounced to 453 recently, and the reason why the market is doing what it's doing at the moment. All right. So number one, we're starting off with Apple, and the reason why is because Apple is just multi-trillion-dollar company. We're looking at these multi-trillion-dollar companies to see how much more weakness there is to the downside. And we're going to correlate them all together to give us a better understanding of how much more room there is to fall. Okay? Basically what we're doing. So Apple clearly holding this 173 level. It's failing to break above 176 or 175. So it's still weak, but Apple is at a level of support. If it breaks below 173, then we can break below 172, fall lower. But technically right now, it's bearish, completely bearish momentum, but it's holding support. Okay? Microsoft. So I want to preface this by explaining that if the large tech stocks did not bounce like this, or if they did not hold support the way that they did today, the NASDAQ would have gotten destroyed. So it was very fortunate for the market in general that the large tech stocks basically got a bounce. Okay, so Microsoft, you can see that they caught a bid as it broke below the Bollinger Bands and it bounced. Okay, held support a bit. Google held for dear life basically at above 130. Amazon, it closed outside of the lower level of the Bollinger Band. Okay, Google, there's still room to fall lower. Technically, right? Bearish momentum. Apple, still room to fall lower. Microsoft also, right? Clearly bearish momentum. There's still room to fall lower. I'm basically showing that these stocks are not very, very overextended to the downside. The only one so far was Amazon. All right, Amazon, it's closed outside of the lower Bollinger Band. But that doesn't mean anything because the Bollinger Band is also pointed lower. So it can continue to fall lower. So none of these stocks so far are extremely overextended to the downside to a point where a bounce is warranted. Not warranted, where a bounce is inevitable. We can easily tomorrow fall lower. But now is the time to start scaling into longs. But just keep in mind, tomorrow can also be bearish. So Amazon, we looked at those. Take a look at Netflix. Netflix, I was showing how yesterday Netflix still had more room to go to the downside. The Bollinger Band's very, very low, pointed low, just vomiting here. Netflix is falling lower. There's a lot more room to fall on Netflix. But then here is the interesting thing. Here's where the interesting stuff starts. So looking at the semiconductor ETF, the SMH, it is very overextended to the downside. And in this ETF, you have Nvidia, AMD, you have the large semiconductors. So this is where the interesting stuff begins. So when you're looking at Nvidia is, okay, it's very overextended to the downside. But we've seen recently in the past, you know, it was very overextended to the downside here. But then the next day, fell again, and then the day afterward it fell again, and then the fourth day where it finally like remained outside, we got a huge bounce. So there's still room to fall on Nvidia as well, but now is not the time to start leaning short. There is a much better risk reward to the long side than there is to the short side. Yes, we can fake out, we can make some more legs down. Similar to what happened here, we can make some more legs down, but the risk reward is heavily in favor of longs than it is to shorts. So that's my thought process, especially as we're very overextended to the downside, especially as Nvidia it breached below this trend line level from back in January. So back in January, this was a very important level here. Back in end of December, sorry. So this has been support. And now we're back to this level. So this is very important on Nvidia. There is more room to fall to the downside. Granted, sure, the Bollinger Bands are pointed completely lower here, which also shows that regardless of anything, we can easily still remain inside of the Bollinger Band tomorrow. So what I'm basically doing here is I'm trying to see how overextended things are to the downside and how much more room there can go. And one of the most important things you have to look at is the direction of the Bollinger Bands. So if the Bollinger Band direction is pointed low like this, you can have another huge red day and it'll still open within the Bollinger Band. So what I want to see, what would be the easiest thing for a bounce, guys, would be if we have multiple days where we open outside of the Bollinger Band. So over here, we had 3 days in a row, 1, 2, 3 days in a row where we opened outside of the Bollinger Band. And it was possible to do that because the Bollinger Bands were still high. They were not like, we had bigger moves to the downside compared to the Bollinger Bands catching up. So right now, the Bollinger Bands have basically caught up. So they are comfortably pointed lower. And it would take extreme moves to the downside for us to open outside the lower B band. And that is showing bearishness. When the market is not extremely overextended to the downside just yet, there's still more room to go. But now is definitely not the time to be long. Okay, so now is definitely not the time to be short. You can start, now is the time to start taking profits. Now is the time when people are starting to take profits on their shorts. We're at a level of support here, especially as we get closer to this 400 psychological level. You can't be shorting into that level. You know, it just doesn't make any sense. But basically, Nvidia, I want to start seeing extreme overextensions to the downside on Nvidia, and that would mean that if we open outside of the Bollinger Band, it would make it easier for us to be long on the overall market. That's my point. So Nvidia still showing some more room to the downside potentially. AMD's Bollinger Band is much further away than where Nvidia's is. So AMD is most likely, if we open flat or if we open red, AMD is most likely going to open outside of the lower level of the Bollinger Band. And generally, that is a bullish sign. So if AMD gets a bit of a bounce, if the rest of the chips should basically get a bit of a bounce tomorrow, given how overextended things are in terms of the Bollinger Band, especially the semis in general, right? So TSM also doesn't look great. This is also a historic fib level here at 85. From a few years ago, I didn't even change this chart. But basically, it doesn't look as good as AMD's. But because the Bollinger Band is pointed extremely low, we can easily like open within the Bollinger Band again. But with multiple chips, if TSM and AMD are basically overextended to the downside, open outside of the lower B bands, then it can prompt a bounce in Nvidia as well. So overall, you know, with things this overextended, we just have to watch. If we close, so look, the lower we fall, the lower and the faster we fall, the easier it'll be to catch the bottom. And that's basically my thought process for all of this, and especially if the chips can show a bottom, because right now the chips are showing the most weakness, and the tech stocks can key off of the strength or the weakness of the chips. So if the chips start to bounce, if SMH starts to bounce, you can see it's pretty overextended to the downside. If this starts to bounce, then it'll help the rest of the market. And yeah, that's my thought process. So now we have to definitely take a look at the the rest of the indices. We're gonna take a look at the SPY, the NASDAQ, and the IWM. All right. So we're currently long on the IWM. I have 179 calls for October for about 3 weeks out, and I'm expecting us to get a bit of a bounce on the IWM. The IWM is also the most far overextended out of the three indices in terms of the Bollinger Band as well. Obviously, the Bollinger Band, we can easily like fall lower tomorrow. It's not an automatic reason to be bullish, but I'm throwing a dart at some calls here. And the momentum, clearly, the overall momentum is clearly bearish. All right. All I want is for us to get a bit of a bounce and just get a smarter opportunity for shorts to basically, now's a good time for people to start selling their shorts, and a better opportunity for people to re-enter into shorts for a continued move lower. That's what I'm looking for. I'm not looking for an extremely bullish move out of the market. I'm not expecting new highs into the end of the... I'm not looking for any of that stuff. All I'm doing right now is I'm looking for a bit of a short-term bottom. I was saying... So, about to take a look at the SPY. I was saying this setup for weeks now. I was saying the setup on the SPY, no way, shape, or form is this a bullish setup. I was saying that over and over. So, but now, right? Now is not the time to be bearish. Now is more of a time to be bullish, to look for buy opportunities. And this is definitely getting very overextended to the downside. It would be a blessing. In my opinion, it would be a blessing if we gap down. If we gap down to like 428, 429 tomorrow, that would be a blessing, because it would make it very, very easy to go long. So what I want to see right now is, so the way that basically all this is going to work out. So we have support at 430, right? Then we have an important level at 427. There's levels in between it, but 427 and then 430 are the two like main levels, right? And If we gap down below 430 into the 428, 429 range, then that'll just be a long opportunity handed on a silver platter, in my opinion. It would just be spectacular. Because right now, you can see the Bollinger Bands are pretty overextended, right, to the downside. We closed outside of the Bollinger Bands, but we need an even bigger move down. What I don't want to see, so what we don't want to see right now is for trying to catch a bottom. What we don't want to see is a small green open. And then if that small green open, so this is the futures. So if that small green open leads to us opening within the Bollinger Bands on the SPY, so then if the SPY ends up opening within the Bollinger Bands, then that is very, very bearish. It's not automatically very, very bearish, but that means that there's a lot more room to fall to the downside before we get extremely overextended to the downside. What we want is for us to be extremely overextended to the downside. What I mean by that is I want to see multiple closes and opens outside of the Bollinger Bands on a daily chart. If we open within the Bollinger Bands, that means that same day we can fall even lower, and then the day afterward we can gap down and open outside the Bollinger Bands. But if tomorrow we open outside and we fall even lower overnight, and that makes our job much, much easier. We'll sign in on Friday and just go long on everything for a week or two out, and just, we don't even need to day trade, in my opinion. That would just make it very, very easy. Obviously, manage your own risk. The market can still, intraday, could still continue to fall lower. But yeah, honestly, the more overextended something is like this, the higher likelihood we'll get a bounce. And it happens time and time again. We've been monitoring this time and time again. Like I said, now is not the time to be bearish. With all three indices basically showing this much weakness. Especially with the chips showing weakness, with the VIX, the dollar, the bonds, all of these things in tandem is pretty spectacular. That it's starting to become easier to see a bit of a bottom, and I hope that is the case, and I hope tomorrow ends up being pretty easy day of trading. Just pray that overnight we gap down even lower. And also, that's basically it for the video. But for everyone that's still watching, I really appreciate you guys. And I just wanted to ask you guys, so basically I finished a trading course, right? So I made all of the PDF documents and everything, right? Not PDF, PowerPoint slides. So I understand, like I have it all mapped out. What I don't have in it is, like, I'm not explaining what is a candlestick. I'm not explaining, okay, this is a bull flag and this is going to increase like this, blah, blah, blah. Maybe I can do that in a different, I could do that in like a different tutorial. But for this course, it's more of like how to, like, you should already know the fundamentals. And this is how you get started with trading. So I'm going to be explaining how I find my support and resistance levels, the different indicators that I use, how my charts basically are set up and how they look, understanding options trading, and a bit deeper. But yeah, I'm just interested in your thoughts of what should be in the so my intuition is saying that, like, this should just be like an intermediate or a more like advanced course, since most of the people, everyone that's watching right now, knows what a candlestick is and knows like what patterns are and everything. So yeah, what are your thoughts? I think doing it the way that I have it, where I'm not explaining the candlesticks and I'm not explaining what patterns are and stuff, I can do that for like a separate course, for like a completely beginner's course. But for this, it's more impactful for everybody, and it'll save more time for everybody if I purely show like the ins and outs of how I find these trades and everything like that. So yeah, with that course as well that I'm gonna do, it's gonna be more of like a webinar sort of thing as well. I'm not really sure if that's the right word, but I'm gonna be like giving my thought process and talking a lot. So yeah, I'm excited. I've never done it, and I don't want to prolong it because you know, it just needs to be put out already. So yeah, I'm glad that finally we're about to, you know, I'm gonna start recording, so it should be good. But yeah, let me know your thoughts. I think we should just do it that way, but yeah, let me know your thoughts, and pretty excited to see what the next steps are in the market. All right, so yeah, thank you guys for staying till the end here. Hope you guys have a wonderful rest of your day. Please make sure to like, comment, subscribe, do all that good stuff, and I will see you guys bright and early. Hopefully I'll be able to stream tomorrow morning, but most likely you'll see me bright and early tomorrow morning. All right, love you guys, take care, have a good one.